Today, we will be looking at calculating the inflation rate using the Consumer Price Index, or CPI. But first, we'll start with an introduction to the Consumer Price Index. It is a measure of inflation. That's what it is in simple terms, and that's all you really need to know for this video. But I'll give you a bit more background just so you can kind of understand how they really get this number. It tracks the changes in the cost of a typical basket of goods the average household in the nation regularly purchases, and it monitors these changes over time. So a typical basket of goods in a nation is kind of always going to be a estimate or like a best average. Like it's not going to be a perfect. For example, there's different households in a nation. There's elderly households and there's households that have newborn babies. These households are going to be, for the most part, buying different goods as they have different needs, but there might be some overlap, but they're going to mostly be buying different things. So this is just the best basket that they can get that captures the whole economy. So the inflation rate is the percentage change in the average price level during a specified time period. And when I'm referring to average price level, I mean the average price level of this typical basket of goods that we talked about in the CPI definition. One more quick note before we move on to the calculation. CPI is measured against a base year. In Canada, this year is 2002, and this year is given a value of 100 in the CPI index. So 2002 is 100. In November 2023, the CPI in Canada was 158.8, which represents a 58.8% increase in the basket of goods since 2002. So this is pretty obvious if you look at the numbers, but 100 is 2002's base year value. And in November 2023, the CPI in Canada was 158.8. So the 58.8% increase is just this, simply this. It's 58.8 higher than the base year in 2002. Now let's do an example. Canada has observed the following CPI data from November 2022 to November 2023. Calculate the inflation rate for this time period. So as we can see, the CPI in November 2022 was 154.0, and the CPI in November 2023 was 158.8. So we're going to be calculating the inflation rate over this 1 year span between November 2022 and November 2023. And to do so, we're going to be using this equation. So the inflation rate is equal to the CPI in the current period minus the CPI in the previous period divided by the CPI in the previous period times 100. The current period will be November 2023 as that is the higher year. So the current period is always the higher year or higher date, and the previous period would be the lower one. So in this case, the CPI of the current period would be November 2023 and previous period will be November 2022. So when we sub that in, we get this. The inflation rate is equal to 158.8 minus 154.0 divided by 154.0 times 100. And then when you do 158.8 minus 154.0, you get 4.8. So 4.8 divided by 154.0, and then you just times it by 100. And timesing it by 100, all that does is turns it into a percentage value, which is what inflation rate is. It's always denominated in a percentage value. And when you do that, you should get 3.1%. So you get 0.0311, and then you times that by 100, and then you get the 3.1% inflation rate. So the inflation rate in this 1 year span between November 2022 and November 2023 was 3.1%.